Hello once again, Dave Knight here at Knight Capital Management. We are looking at May 4th, Wednesday, May 4th, 2011. And we're getting ready, and just to kind of talk about this, at about the 6 minute mark, or 6.5 minutes, you're going to see the actual trade that we took in the room on May 4th. Tomorrow, Cinco de Mayo, May 5th, tomorrow, May 5th, we are opening up our trading room once again for a new class. So once again, we're looking for 10 to 12 new members to join our trading room. And what I want to do here is kind of go through some proof here. Here's my account statement up to this point in time. Sitting at 6,832 and a half. Notice the statement date is 5/3/2011. So this was as of yesterday. And we started with an account statement. You can go back and check at YouTube. It was $5,066. And so anyway, so that's what I want to show there. And in today's trading, you'll notice that we made $234 more profit, so we're above the 7,000 mark. So what I want to talk about right now is move on off of that and talk about the optimum trading strategy that we have. Initial capital that we recommend is 20 to 25,000 to get started. Although I'm demonstrating this particular trading strategy with $5,000. So your minimum account equity that you need to open up your trading account, which I highly would recommend, 5,000, and then back that up with 10,000 or so more dollars behind that money. Just it's always easier to trade without having scared money. So that's just part of that fear and the greed component, right? So here is the trading strategy as of last year with the 25,000, 61%, 2.32 profit factor. And I showed the graph before on the video before that, but just in case you missed it, the blue line here is equity and the black line here is the loss and gains per trade. So we started with 5 contracts on this particular strategy on this on last year, and we were able to get up to 9 contracts within the time frame. Now, what makes this a lot harder now is that we started with 5,000. Now this is the $5,000 account. Notice we started at $5,066, and the statistics are a little bit different because we're starting with less money. It's a little bit harder to, we're risking more on each particular trade. Now what you should expect is your winning percentage to come down a little bit, 53.72%, and this has a lot to do with where you are in relation to how much you can risk, and our profit factor at 1.19. And even with a 1.19 profit factor, notice that we're up $2,000.50. Now that's after commission costs, by the way. So after all commission costs are out of the way, we're up $2,000.50. So we're actually add those two together, and that's where our account balance is, $7,066.50 as of May 4th, 2011. Now last thing I want to show, graph. Look at the graph here. Higher lows is what I want you to pay attention to. Higher lows, and we're pushing here to get ready to break out and make a new peak. So we've had some valleys along the way. That's kind of a typical equity. Here's our wins, a positive. Here's our losses here. We had one particular trade that I want to talk about here. As a $692 loss was on 2 contracts. We were able to break out at 2 contracts, and then we lost that initial trade, and we had to work our way back up to there so we could trade 2 again. So we're finally above that 7,000 mark, and we get a little bit of cushion here. We can go shooting for 2 contracts and have a breakout. So that's what we're trying to do, is try to have a breakout. Now I want to go through a long-term plan here. And this is our money management trading strategy, and we base it on actually 2 things here. It's actually 3 things. It's fixed fractional money management style with a fixed ratio, and also has a volatility component to it as well. So this is just the dummies page here. You can go to dummies.com and hunt it down, and you can get the formulas and so forth. But we actually use a formula based upon, I guess you could say it's a hybrid of all this. And we use a volatility as well. And then I'm not giving you all the cards here, but it gives you the ability to kind of look and see how you can develop your long-term plan here. Notice that within one delta here, and delta meaning how much you need to make before you increase to the next contract size. For instance, 5,000 to 7,000, that's $2,000. That's your delta. It lets you trade 2 contracts. So notice that with a 1 delta within September of no, I started here May 1st. That you should be able by September 27, 2013 should be at $500,000. So this is a 1 delta. It's highly risky to go ahead and do that at this point. And here's your graph here. You notice that when you're at this particular place going from 1 to 2, this is where it's the most risky, and then as you push forward to 4 and 5 and move your way up to 10 and beyond, you see that you're able to eventually get down to that 4, 5, 3, 2% risk per trade. So that's kind of the goal here. Obviously, the more money you have to start with, the better off you are on any particular trading strategy, right? It's easier to make $10,000 on $1 million than it is to make it on 100,000 or try to make 10,000 off of 10,000, right? So it's always easier to make the $10,000 on the more money that you have. That's just common sense, right? So anyway, so the goal per week 350, and very doable goal each week, and been able to reach on a 1 delta particular profit in 5 years where you could be. That's if the world doesn't end on December 21st, 2012, right? I joke about it. Anyway, so I believe I covered everything I want to cover here until we get out on the video. So our live trade is actually on today. So when you start hearing me talk about it, you see me set up the day and watch the live trading action as well. Thank you. All right, Dave Knight here. May 4th, 2011. It's Wednesday, May 4th, 2011. We're waiting on the inventory report to come out here at the 10:30 mark. Notice that we're pretty much red all the way up this morning. Just one green here in the European UK markets, and then the US markets coming in with red reports as well. So notice the markets is down here right now. Dow down 90.91 and prior to the inventory the statement release here at 10:30 a.m., which is about another 20 minutes from now. Briefing. Once again, we notice that overseas markets are moving lower. ISM just came out. Oil inventories and silver extends slide. Notice that they're talking about it once again in the headlines too as well. Talking here in the backdrop, crude oil prices with the release of weekly inventory data at 10:30 a.m. It is important today. We want to pay attention to it. So we wait on this report to come out. And if you come back and down through here, you'll see I'm talking about it again. It's going to be coming out. All right. The Obama Mama in the Politico area, commander and troops. Chance to address the members of the military on Wednesday as he welcomes wounded warriors to the White House. All right, so you got that song in the back of your head right now. It's getting kind of hectic. Or heavy, whatever it is. I think it's hectic, isn't it? Snap. All right, so we have a little bit of a surprise here in inventories. Expecting 1.9 comes in at 3.4. See how that plays out. 23 again. Looking at 23 to short. Be a 1R target. Last low went down there to 24. See if this holds here, this 49. Dollar index coming off its lows. Be looking for 25 ticks from 109.23. In at 22. At 108.98 target. Stop of 109.47. Go ahead to break even here. Out. Plus 24 there. If you're holding on, might get a strong bounce here, so be careful. Might consider an all-out exit. It will only and hold just your rabbit trade right now at your break-even target. Hold the rabbit. That's in other words, hold just your the rabbit part of or the runner part of the trade. Don't hold anything more. Now, the reason I went after 98 instead of 97 there is that it was 30 ticks away from that one from the R. So I went, I mean the LADR. So I went after 20, where that 25 ticks were, and I needed to be in at 23 or better, and it filled me at 22. So that's why I got 24 that time and not 25. So a break even would put you at 22 right now on your rabbit. That's the only part of the trade, your runner. That's the only part of the trade you should have on now. Everything else should be off. So that's $240 today. Less $6, $234 today. That was fast. Yeah, I love those fast ones, don't you, man? I love those fast ones. Love them. I mean, we didn't have a chance to move it to break even, and it's already filling you. So you gotta love those. Those are the ones that you think, whoo, that's why I'm trading crude oil. That's why I'm trading the crude oil market.